Morning, everybody. Today I'm trading a live account with AMP. I took a pre-market trade literally a couple minutes ago, about 2 minutes ago, and I just want to see a run to these equal highs. But we're gonna get into um, kind of just how I view the market, what I look for. My model, very easy model. Um, but yeah, I'm overall not firm on a bias today. Um, let's do this. I'll make it on the big screen so it's a little bit easier to follow along. But after yesterday and that close and our pre-market close right here, or not our pre-close, our just pre-market movement overall, we've already swept all these previous day lows right here, but some gradient levels I'm going to be watching here and I have marked on my chart is this super long wick right here because it's the longest and overtakes this candle's body right here, and then this candle from Wednesday because it's longer than yesterday's discount candle. Okay. Overnight, what we've done is yesterday was just really terrible price action, so I'm assuming that today is going to be a little bit better. Um, we could be seeing like the reason I'm conflicted is because I think we could be seeing a TGIF retracement, but I also want to see continuation lower because my targets have not all been met. We've got this hourly swing low that's resting right above an hourly fair value gap, which is typically a really strong draw on liquidity. And we've got these relative equal lows right here. So that's pretty much my higher time frame bias moving forward. But we're stuck in a giant range because we have these perfect equal highs at previous week high as well. We're just trading within all of this right here. But within what's happened overnight, after this huge down move, we went up and then ranged in the middle of the day, um, or in the middle of this range during the day, which is super common to happen whenever we have a really dramatic up move and dramatic down move like that in this huge range. Typically, what we do is we just go back into the middle of it and just chop around until we get, you know, a substantial move in one direction to give us confidence. I'm watching in the bottom right hand screen here. This is my trade going on, and we open up in 3 minutes here. But what we've done overnight is we've taken these equal lows, and we moved higher into this hourly fair value gap right here, and the wicks respected that perfectly. The midpoint right there, that's where London high was made. Now, typically, I'm looking for London to create the high or low of the day, depending on my bias. But right here with a bearish bias, I'm kind of conflicted on if this is going to be a protected high because they're relatively equal. If you take a look right here, that's relatively equal, but it's also right at the midpoint of this hourly fair value gap. All right, we're seeing some wicked movement here. We're trading below this daily volume imbalance, which is right here. So, all right, we're about to see our targets hit. Hopefully. Let me move this up to break even because we got open in 2 minutes. Just want to make sure I'm protected in case of any crazy volatility here. Could use this as an inversion fair value gap. So that's pretty much why I'm break even, is because I wouldn't want to see it go back below here on a closing basis. We want to see it hold this midpoint. But the reason I liked the trade overall is because we went and took these relative equal lows right here. We just barely tapped them, moved a little bit back into the range, and then this was real manipulation lower, right? That huge down close candle, and it's through this gradient level. So once we had that displacement back above, we shifted structure right here. We have equal highs. Equal highs or equal lows is my favorite target of all time. Like, it's just so easy to spot. And so I like this order block because it's anchored to this gradient level, which if we go back to the daily time frame, again, it's this old daily wick right here, and it's that low. Or no, sorry, it's this 25 level.
Order filled.
Okay, so TP was just hit on my funded accounts, so right there. We got open in 10 seconds. There we go. Okay. All right, so TP hit. Nice little pre-market trade right there. That was just a really simple change in the state of delivery up to equal highs. We got our open, so now what I want to do is I want to look at my, all right, we're lagging here a little bit. I want to look at my opening range gap. We are really lagging. There we go. So we have a giant discount gap. And we also have news at 10 a.m. So I want to measure this out from my previous day settlement up into my opening price at 9:30 right there. I always make my current day green, and then I'll kind of switch between colors on other ones. So to you, it might look like a bunch of random ass levels right here, but to me, I have it kind of organized in my head just because that's how it works. But immediate move lower right here. So good job taking profit at a low hanging fruit threshold. That's what I've noticed a lot with what you've had to do this week. I think overall it's just been a really ugly week of price action. We've had moves happen primarily overnight or during pre-market, right? Like I was targeting a set of equal lows all day yesterday, and they just would not get hit, but they finally got hit as soon as Asia opened after just some wild moves. Okay, so let's get a little organized here. Execution marks right here. This is just a really, really simple trade, right? Change in the state of delivery that overlaps this gradient level that I already talked about. Inversion fair value gap. We had this BISI right here that was unable to get tapped, meaning that indicates strength. And then we were targeting equal highs right here. So that was just my little pre-market trade right there. I don't take pre-market trades often, but when it's something like that, that's just very obvious, I will take it. And pre-market price action was really good, right? Like, look at this, sweep of high. And then this is like your classic change in the state of delivery 2022 model right here. So that was really good stuff. I want to keep an eye on this daily volume imbalance right here. And then since it is such a large discount opening gap, typically want to wait to see what price is going to do. Because this is a 450 point gap lower. Um, Going out and trying to immediately long or short is just low probability in my opinion. So a lot of times what they can do is they can like bring it higher, trying to engage longs, take out shorts, and then do something like that and try to move it a little bit higher. But again, with my conflicting bias just because of these equal highs and these equal highs, but they're within that hourly fair value gap. If you take a look at the top right here, it's a little bit conflicting because I overall want to see Asia low and these lows down here get hit. Can't see it on the 1 minute time frame. These lows. So that was pretty good entry and exit right there. Happy with that. Okay, so that was my alarm for um, ES taking these lows, I believe. Oh no, yeah. So this is why for me it's important to have those gradient levels on your charts because look at the reaction to levels like this, right? It's precision. I can take this off the chart because I originally had this because whenever I open up my charts, I look for smooth edges, right? That's a smooth edge right there. Is that a smooth edge? No, but it's Asia low, so it's still important to me. But since we're within this range, I look for these smooth edges. So those were hit, and that's really where my trade formed, combined with that gradient level right there. Now you still have these guys up here, so I'm not counting that out yet. And the initial move today is lower. So I always try to keep a thought in my head on who's getting manipulated right now and who's still left. Right, so we've engaged sell stops right here. First we brought it higher, engaged by, what do you call it? We just engaged buyers right here by breakout buyers above these equal highs right here. Then we brought it lower, took the sell stops below here. Now we're starting to rip higher. This is your initial high. Equal highs up there. But when they brought it down here to take the sell stops right here, they left relative equals at Asia low. So a lot of times, so I'd be looking at this right here. This is your first presented fair value gap. Overlaps that gradient level again. And it swept pre-market low. And now we have this BISI overlapping it as well. Um, Initial high right here. And initial low right here. So again, with such a large opening range gap, I'm not going to go in, jump in there right away. I want someone to get manipulated first. And this to me looks like an engineering of sell side with the initial low and Asia low right here. So this could be enough to take pre-market low and leave these. And I don't think this is necessarily a bad long because they took it higher first and then they took it lower. So this could be enough damage, and then we have some bullish signatures right here. If we can hold the midpoint of this, then I think we're good to go to at least initial high right here, and then we'll see if we can keep pushing a little bit higher. But personally, for me, it's not something I'm going to engage with because of these equal lows at Asia low right here. It very well could work, and I think this is not a bad trade to go long. Then you got to remember too, at 10 a.m. there is orange folder news, so I'm going to put a vertical line right there just to remind me. Don't want to make that rookie mistake. And again, with ES, there's relative equal lows right here as well. It came down first and swept these relative equal lows right here at 364.5. It's a volume imbalance right here. That's why I went like that, because I want to be able to spot these little gaps. Relative equals up here and down here. So when we're trading in the middle of a range like that, it's low probability, especially right at open, because they're engineering liquidity on both sides for people to get trapped. So you just want to sit there and wait for one side to get manipulated. Look for where the relative equals are, and then engage in those. So we're looking at this midpoint right here. And also, don't count this out as well. If you've had a tough week, I wouldn't be too hard on yourself, because I think these are the types of weeks where they remind you how important risk management is. And it's a test to see, are you still following your risk management rules, or are you just in there trying to get wins? And I caught myself a few times just in there trying to get wins, right? We all get caught up into it. Um, but then how you manage yourself off the charts is how you can realign yourself for the next day. And I'm always trying to monitor to see, am I in a position where I want to take a trade, or I want to follow my plan or my model? And I know I'm in a mindset where I just want to take a trade and make money because I'm constantly checking the charts. I feel it. I just have that feeling, you know? And whenever I can identify that I'm like that, that's when I know I have to do things outside of the charts to realign myself again. Like for instance, today before um, New York Open, went on a walk around the neighborhood, did some stretching, and I don't really meditate because um, it is I gotta work on that. I'm not as good at that as like just going for a walk and having that clear my mind. So look at the body's respected volume imbalance right there. There were probably people trying to short this inversion fair value gap right here. But again, being within this range, it's tough. And you got to take into account with your fair value gaps the volume imbalances. If you don't, then you're going to read your gaps wrong. So see how they're holding it within that range, right? Going right up to these to this high right here, this initial high, but then jerking it back down into the range right there. So it's just um, that's when it's tough. So again, just building a range before news. Might be able to hear my cat in the background. She's going crazy. What are you doing? Another thing you want to be doing too is switching back and forth between electronic trading hours and regular trading hours because this helps you kind of see what liquidity is being generated on both ends of the range during uh, regular trading hours. So you're going to see liquidity that others won't usually see. It's also helps you recognize things like looking to the left during regular trading hours from the previous day, right? Like if these weren't hit during regular trading hours, people still might be um, they might be trying to go long prematurely when there's a bunch of liquidity resting right here. Oh my gosh. So yeah, these New York ranges have just been extremely rough. Definitely a tough week of price action for sure. You kind of just got to get in there, find your piece, not hold for um like long-term targets. You kind of just have to get your low-hanging fruit targets and get out of there. That's the mistake that I've made this week is expecting my external targets to get hit when after realizing after multiple times of that not happening and then getting like multiple break-even trades or um, like trailing stops getting hit, that I just had to start going for hanging fruit targets, and that's what you saw today, and why I went for just these little guys right here, these equal highs. Took this change in the state of delivery. How many handles was that? About 90 handles. Oh wait, no, no, no. About 60. And not holding like so usually I would try and like hold for something like up here, like this pre-market high. That's what this is. And then these equal highs up here, right? I would maybe have a runner. But based on the intel from earlier this week, I know to just hold to these. So you kind of got to just adjust with the market and the conditions that we're in. And I very well might not even take another trade today. I already got my win, and it's Friday. And so far it doesn't look very fun. Hopefully people aren't getting chopped up in this, but you know they are. I want to put um my TGIF levels on the chart. But I will once we start to see a bit of a retracement. Because I think we still have room to go lower here. I still think we can go down here. But again, trading within in between a range, in between equal highs and equal lows. How do you know you're within a range? Is you're within equal highs and equal lows. And we're in the middle of that, like directly in the middle. So it's 9:50 now. 10 minutes to news. I'll only be going till max 10:30 today, just because um, again it's Friday. I've already taken my win, and there's no reason for me to stay too much longer looking at the charts to make bad decisions. Gotta check how much that trade was for my journal. 282.5. Come on. 235225. 70, about 70 handles, so about 1-4. Okay. All right, we're all journaled. Shit, I might even end it at like a little bit after 10 if it doesn't do anything here. This is like watching paint dry. All right, there we go. Some movement. I don't know where my YouTube window went. It, like exited me out of my little dashboard thing. Whatever. We're rolling with it. All right, so we're moving higher towards equal highs. Pre-market high right here. We've left equal lows. That's your pre-market high. Why is it pre-market high? Because pre-market is from 7 a.m., which is right here, to 9 a.m. or 9:30 open, which is right here. Pre-market low, pre-market high. It's your highest high within that range. All right, so now this BISI right here overlaps quite a few key levels. Let me make this a little bit lighter. So overlaps 9:30 open, midnight open, the daily volume imbalance low, and this wick lower quadrant. I want to know if we hit that. That's London high. And I want to know if we hit this. That's Asia low. Relative equals. So it may not need to go up here. This may be enough damage, but I have to wait and see. 10 a.m. news about a drop right here too. All right, so look how it hit the high of that daily volume imbalance right there and sent it higher. Equal highs hit right there. And it's also the high of this daily wick, this discount daily wick in the top right. So those levels overlapped perfectly. Hit that, went up higher right at 10 a.m. news, took our buy side at the equal highs. We've hit the lower quadrant of the opening range gap. The midpoint is right above London high. These targets were good as well because look how the targets overlap with um, the midpoint of this daily wick right here. So in the top right, you can see that's the midpoint of this long wick, and it's overlapping with these equal highs right here. So that's a good draw. And we're seeing the same for London high, resting right below the midpoint of the opening range gap right there. This fair value gap overlaps that opening range gap lower quadrant. So notice how when you have these levels, it's where your gaps in your PD arrays are getting created. I'm tape reading a move to see if this can take us up to the equal highs right here. And look how smooth these are in the bottom right hand corner, Asia low, right? So now all we've done for the morning is go lower, engineer equal lows, and move higher. Now it's 10 a.m. So to me, this is so far looking like an opening range Judas swing. If we could poke above here and then start to show displacement lower, I'd like that. Look how perfectly hit that lower quadrant right there. All right, so I believe London, or London, ES just hit its London high. Yep, right there. See if NASDAQ can give that fall through as well. All right, so if you take a look, we're right at that retracement level of the weekly range from Monday high down to the current weekly low. We're right at the 20% retracement level. So that's the classic TGIF Friday or TGIF retracement. Make it a little bit thicker right there. and then 30% is right up here. I would not want to see that though. I don't see us start to move lower here because we just took those London equal highs right there. So I'm going to get this off the chart here. Now I would want to eventually see this be an inversion fair value gap. First utilization was it took us to take all these equal highs and session highs. Now if we can trade back down below it, I want to see us respect the midpoint of it and then go lower. Looking at this up close candle right here. Just fell short of the midpoint of the opening range gap. Which is from this high to this low. That's that midpoint. So since all of this is balanced, right, it's going to take a really strong move to get below all of this. So I'm thinking if I am to take a short, if one does present itself, this would probably be the best draw. Because I would assume, unless we get a really fast move, when we get down to this area, since this is all balanced, it's going to be a lot tougher to get through, unless we just absolutely tank to these equal lows. So these equal lows would be a good place to have like a runner, right? But having it as your primary target and holding all of your contracts just for that, I think would be a bad idea. But that's all given the premise that we actually do get a short presented here, because we may not. They may be leaving these for another time. Um, the higher time frame direction could be wrong. This could be an order block, and we could just have taken relative equal lows, and we could start to make our way towards these relative equal highs, right? We're just in a position within this range where it's kind of tough to read right now. So we just hit the midpoint of that opening range gap. This was a good tape read right here, right? I mentioned this gap taking us to the equal highs right here. What's up, Final Curse? How you doing, bro? Sorry, I wasn't able to see your comment till now. For some reason, it like kicked me out of my YouTube studio setup, so now I don't have like any of my live analytics. So now I'm literally just watching my screen or watching my stream on my second stream on my second screen. Jesus. So we're bouncing off that midpoint there, which is so far looking like a bearish signature to me. We've got this 15-minute close here in 4 minutes. So I'd want to see us start to push a little bit lower here now. Looking at this up close candle. And the midpoint of this wick, because it's digs pretty low. It's a long wick. Just close below that. What's ES looking like? Not really doing a whole lot here. Q's looking a little bit better. Alright, so let's go down a 15-minute on this chart. Check the hourly here as well. Looks pretty good. 15-minute. Oops. So if you take a step back and actually scroll out, it doesn't look like a whole lot right now. I want to see us prove that we are going to get bearish characteristics here. So I would demand that we do not go above this high right here. We hit the midpoint perfectly. We swept London high. We're hitting up into that right now. We have a SIBI right here. So if we can hold the midpoint of this, and this, so I want to look at the mean threshold of this. We cannot close above this level right here. All right, so that's why we wait. Wait for those bearish characteristics. That's why your low risk sell in a market maker sell model has to be low risk, because this would technically be a low risk sell and it would have been a loser. And you don't want to go in with your full leverage, because trying to get the low risk sell is the essentially the hardest part of the move. You're trying to pick the top or bottom. So we may be wanting to go poke this one more time. So it's kind of like a one poke, two poke, and then we could see if this will be inversion fair value gap once this BISI gets created. This could be like a turtle soup right here. And then this opening, it would be like your breaker and your change in the state of delivery right here. So this would be your breaker, these two down close candles, and then this would be your change in the state of delivery. And now this is enough displacement to where if we actually do inverse it, that's something that I would enter on. We get our 15-minute closure in about 20 seconds here. Okay, so that 15-minute close to me doesn't look extremely bearish. Still gonna give it its chance though. So it's all just about waiting, right? I've literally said since 9:30 open that these equal highs in London high, they were on my radar, but they didn't necessarily need to get hit if we were bearish, because this London high had done its damage into this 1 hour SIBI. But we did take this move higher right here. So again, right now I'm anticipating that this is that fake out move for the first 30 minutes, first hour. And what is a draw for the first 30 minutes or first hour is the midpoint of the opening range gap, which we have hit, which aligns with the London high, and we're in an hourly SIBI here. with relative equal lows. So we've done a lot of waiting, a lot of anticipating, and now we're in an area where it's crucial where we start to see those um, bearish characteristics lower. So if I was bullish and I was long in this fair value gap, I would not be feeling comfortable right now. This is the type of movement that I would prefer to see. And remember, the longer price spends in a fair value gap, the weaker it is. And this is spending a lot of time in here already and hitting the low of it now. So this candle's opening up, going into it. I want to see if we can hold this midpoint. All right, so I'm gonna go short there.
Order filled.
And then remember what I said about targeting within the range, so I would just go for this. I want to see this midpoint hold. All right, so those bodies went right up to that midpoint. Don't love what I'm seeing. Got a little gap right here. So there's kind of like SMT on the micro contract versus the mini contract. Like we swept this little high right here, and we did not on the micro. So it looks like relative equal highs right here on the micro, but it actually is swept. I just need to see this midpoint hold. And this little sibby right here. All right, so looking like a stop loss here.
Order filled.
Yeah, we're out right there. All right, so back to pretty much break even on the day. They may be wanting to manipulate this one more time. Now I got this right through that opening range gap midpoint. I really don't believe we need to go all the way up to previous day settlement. I think that would be a lot because I don't think these highs need to go get taken. All right, so this will be important here in how we use this. I'll make it orange because I want to see it be inversion. So again, just waiting. We're break even on the day, so no need to feel like you need to take another trade. Just wait for something high probability. Kind of have like a three drives pattern right here after taking London high. So took it right here, high, another high, and then a pretty big displacement move up right here to take these highs. So we'll see if we can start to make our way below, back below the midpoint of the opening range gap, which is a pretty big key level for me. Again, hit that midpoint. See sensitivity there. I'd consider these relatively equal here. Then people see this as a bull flag. So it's an instance where I'd want to see the bull flag fail. But we're pretty much trading as premium as we can get if we're still bearish because we're above this hourly SIBI right here. We're trading like right near the high of it. So that's why this BISI right here is pretty much what we need to see inverse. If it holds, then I think we could go and fill the opening range gap. So we're coming up on 10:30, which is a pretty common reversal time. depending on what price action's doing. I want to look at midpoint of this. All right, so I know the midpoint of this wick overlaps this gradient level right here, which is a daily wick gradient. So any movement above here on a closing basis would pretty much cancel out bearishness for me. I like the closure below midpoint right there. We've got some sibbies on the 15-second time frame starting to show and be respected. I want to see that continue to show. Here, I'll go to a 15-second on the bottom right-hand screen right here. Is what I'm looking at. These are relatively equal again, so if we get above this down close candle, then I think we just continue higher, honestly. Because then this would be your BISI overlapping the opening range gap midpoint, and then this down close candle right here overlapping that as well, going into the daily or going into this BISI and holding the midpoint of this hourly SIBI right here would start to look like we would at least go and hit the upper quadrant of this. We have an end dog right here. So I'm trying to weigh out both options. Because I don't want to get caught in one of those days where this was enough damage. They've left Asia lows, equal lows for another time. And it's just one of those days where we just keep going higher. I want to know where that 30% retracement level is again, just in case. And we could be seeing the beginning of the daily range. All right, so that's interesting. Now it's spending a lot of time in this one too. Since I have a bunch of gradients on this chart right here on the mini chart, I want to measure my first hour's dealing range gradients on a chart that is clear. And I'm going to be watching this upper quadrant right here. And notice how this is kind of right in alignment with the midpoint right here. So if we do get that change in the state of delivery lower, then I think this would make for a great target. Let's see us get below there. I'm not fully trusting as an order block because it would be better if this was below the BISI and going up into it and holding the midpoint, but it's not, so, but it's still overlapping the opening range gap midpoint. So I just want to start to see some, again, bearish signatures from here. All right, so good displacement there from that order block. If we can create a SIBI through this opening range or first hour dealing range upper quadrant, that's something that I would enter on. Or I could also use this up close candle as the overall change in the state of delivery slash order block. Or if this candle opens, goes up into here, creates an order block there. So I got options on how I can enter here, but just want to remain patient. Don't have a fear of missing the move. I don't want to get caught in just a gross day. Okay, so if this up close candle can hold the midpoint, when taps that perfectly, and then if we can get some movement below this up close candle, I think that would be good. Nah, that's not really what you want to see for shorts. I think it's just been another gross day, right? Just chop, displacement higher, chop. Hasn't been all that great. The week in general. So now my eyes are just looking at this whole range again. Still held that midpoint. Now these two up close candles could act as that order block. But look how those bodies held the upper quadrant of the first hour dealing range. So I think what I'll do is I'll set a sell stop if we can get below that.
Order filled.
All right, so it hit on my fundeds, but not this. Just want to see displacement through there. All right, so we're in that. Don't want to see it do that and poke. I want to see it displace through here. This opening price. I think I could even move this to right here. I don't think there would be a reason to need to go above there because we have that inversion fair value gap, the opening range gap midpoint, and this order block. So I think I want a pyramid on my funded accounts here. So I have another sell limit right here on my funded
Order
accounts,
filled.
which just hit. So this daily volume imbalance is a good draw. I like this in the midpoint of the first hour dealing range. It's around 10:30, which is a common reversal time. Judas swing up until then to take London high. Inversion fair value gap overlapping the opening range gap midpoint. This is a pretty good setup for me. Now we have this fair value gap overlapping that upper quadrant. So if we could, I may pyramid on this too. Right there. It may not get hit. I prefer it doesn't get hit, honestly. It would show more weakness. But if it does get hit, then it would allow me to have a runner for the relative equal lows. I'll move this right here. Again, since this first utilization was to take us higher above London high, and it's overlapping the opening range gap lower quadrant, I want to see it displace through here, hold the midpoint, treat it as inversion, and then take us lower to right here. We may not get hit with this sell limit. I think I'm going to take it off. I could always market order. Closure below here, I would move to break even. Or we even swept that. I like how this hourly candle's starting to play out. Since I only have one con on my live account, hmm, I'm gonna put this bid down here, but I probably will not hold for that. But this retracement needs to chill out. We're in this area now. I want to see that hold. This is still fine, but if we start to make our way up into this realm, then I'm not loving it at all. This retracement, as of right now, is still fine. But I don't love this reaction from the lower quadrant. I like that reaction, though. Again, I'm trusting this because it overlaps the midpoint. If you can't tell, midpoints are a big part of my trading. For a good reason. We got to get through this guy right here. Sweep of this low, I'll go break even. Let's see what ES is doing. I want to know when we take that on ES. Creeping up on the 1050 macro here. Want to start to see some fast movement lower. Once we get up into that time, we got 4 minutes till then. Looks like a change in the state of delivery has happened before that, again at 10:30. So then I want to see 1050 kind of power the move lower. It's taking its time up in here though, more than I would like. Again, I have my TP all the way down here, but if we do go and hit this level, I'm going to do a very aggressive trailed stop. Just given the chance that we start to really spool lower, I don't want to leave profit on the table, so then I would just leave my stop at where my target initially was. So then it's just a win-win situation at that point. I'm really trying to stay with the idea and trust it here. I'm looking at these as equal highs and I don't love it, but I'm trying to trust my draw. Just accept the risk. As soon as we get through this area, like if we can take this low, then I think it's a free fall down there right here. But as long as we hold this area like we have been, then it's not great for the trade. Okay, we need to take this high and we need to go lower now. We need to be like a 2022 model on the 15-second time frame. Yeah, this is about as high of it going that I'm comfortable with. This last up close candle right here. It's 1050 in 30 seconds. We got this little Bissy right here on the 15-second time frame that I would like to see us get through and have that 2022 model that I was talking about on the 15-second time frame, sweep of a high right here, going into an order block, into a 1-minute SIBI. We need to get through this. It's 1050. Close below that. I want to see this SIBI. Hold price. Notice how it's overlapping the upper quadrant of the first hour dealing range. That's exactly where my entry is, so it's a bit hard to see, but you can see right here, right? If we don't start to get movement in the next couple minutes, then I will manually cut the trade if my stop is not hit because we're spending too much time up in here. But my stop's in the right place. If my stop gets hit, then shorts are not really accounted for anymore. Kind of seems to be so. It's interesting though. I really was really confident in at least going down to this part of the range. Okay, I'm still looking at this inversion fair value gap and need to hold that midpoint. So that's why I know my stop is in the right place because it's above this midpoint. It's above these two up close candles, which is the order block, which is overlapping the opening range gap midpoint right there. So if we start to make our way above here, then I think we really do just take this high and start to draw towards this new day opening gap and upper quadrant of the opening range gap and even maybe previous day settlement. But we're seeing good signatures here now. I like how the bodies are respecting this. They couldn't even close at the midpoint. The wicks did the damage into the inversion fair value gap, holding that midpoint. Just want to see us continue. Um, just for record's sake, on my other screen, I am also in shorts on my top step accounts. Just so it's known. So I just utilize my live account to try and take like weekly small payouts of like 250 if I have a good week. Take out 500 bucks and leave some of the funds in there, and then um, just build up my funded accounts. So just utilizing both of them. Took a lot of heat on this trade. Been in this trade for a while. But once this low is taken, that's when I can go break even. Looking at this gap right here. What would my risk be if it was right here? 75. So if this can go up here, touch that, hold midpoint, and then we get movement below here, I could pyramid there with a sell stop. And then I would take one off right here. I'll take it off at the daily volume imbalance high. So we just got into that. I'm going to trail this down right here. Incur a little bit more risk on the trade, but I still like this setup even more now because this failed to even go into the SIBI right here, and it's overlapping the daily wick midpoint after seeing this signature up here. Everything we're seeing up here. So now I need to see this act as a real order block. See fast movement below this slow right here. Hitting the upper quadrant of the opening range gap again. Not loving that. Midpoint. This is really it right here. Now we have relative equal lows. In the macro. I mean, it's everything I look for in a trade, so. I want to know where this midpoint is. It's the mean threshold. That's what that wick went up and touched. I'll mark that out. Just watching this midpoint. These two midpoints here of the SIBI and the mean threshold. $10:59, we got 11 a.m. coming up here. Eleven a.m. open. I'm looking for an open, high, low, close. So I would expect us to go higher first. Go up into here. And then hopefully go lower. I like how this 10 a.m. candle closed. It took London high, closed at the low of the hourly fair value gap. To me, that's a bearish signature. All of these candles are holding the bottom of the SIBI. Just in a little bit of time distortion right now. If we close above the mean threshold right here, then I'll take one off. Let's see it hold. All right, so again, it held the midpoint. The wicks are just poking up above here. We're also hitting the upper quadrant of the first hour dealing range right here. Okay, so I don't like that. We just closed above midpoint of this SIBI. Getting ready to take one off. Okay, so we held the midpoint, but we closed above there. The midpoint's really what's holding this trade together right now, and this upper quadrant of the first hour dealing range. Been in some range for quite some time now, about half hour. I think looking back, based on this, actually no, I think it's okay. I was gonna say I probably shouldn't have pyramided based on this, but leading up to this right here, it looked like some clean price action, so I don't hate it. I'm just trying to monitor um my risk right now and how much risk I want to keep on based off of this movement that we're seeing. But I like how the body's held midpoint, mean threshold of that. We're starting to see some displacement lower. So we just need to get below this. Like this whole level I've been saying is what's keeping us up. As soon as we get below here, I really think that we're at least going back to here and here. And then if we're really, really bearish, we'll get through all of this, but it's going to be very tough for price to get through all that. Midpoint of this wick will be important. Already hitting that in the bottom right hand corner. If we can close below that, then I think these equal lows are almost all but guaranteed to get hit. It'd be even better if we close below the midpoint of this gap too. 10 seconds left in this candle. Ah, it fucking held. I kind of closed below, but that's not as prominent as I would want it to be. So I don't think it's a terrible idea to move my risk to right here now. Because we've just spent so much time up in this area, and I think with this and the mean threshold, of that order block right there and us holding and then seeing displacement away, I wouldn't want to see us take this high because it also swept buy side. And we've just spent too much time here. It's getting into the late late AM session, and we've only been bullish, so kind of playing into that late AM macro, that lunch macro of looking for whoever's been profitable to get punished. Part of me wants to keep my risk above the CE of this. It's just a matter of how committed I am to the trade because, again, I want to limit my risk, but I am confident of lower prices. There's SMT here. It's not all that meaningful to me, but it's worth noting. This is pretty brutal. Displacement up and then displacement right back down. Like it's very, very, very manipulated price action here. Okay, in the next 10 seconds, I want to see it close below here. Close below this midpoint of that 1 minute candle right there. So I do want to see us start to have that fast movement now. Took that low. I'm going to go break even. Just want to see a continued movement. My first partial is at the high of the daily volume imbalance. It just took all these equal lows, so it may just poke that and then go higher and go to these equal highs. So my risk is off the table. Who cares? once this, or if it does get hit, I'm just gonna aggressively trail this stop loss up to like the last candle high because I'm just pretty tired of this market. Okay, future inversion for value gap. Let's see you do your thing. This gap overlaps the lower quadrant or the upper quadrant. Nope, I was right, the lower quadrant of the opening range gap. So there's no reason we should go above here. Hit that low and then just fucking tank. I'm taking one off. I'm not seeing the fast movement I would want to see. Doing the same on my
Order
funded
filled.
accounts. Just gotta pay myself. Yeah, in my opinion, it should already be just, it should be tanking right now, but it's not, so it doesn't really make shorts all that promisable. Okay, that's the fast movement that I'm looking for. Or not necessarily fast, but the
Order
displacement.
filled.
Open up and just go. Okay, so we just hit the high of that. I really want to see if we can hit the high of this, but I am ready to just take it off because we hit the midpoint of the first hour dealing range. So if we start to show like any rejection here, I'm just going to take it off. Yeah, so that's why I did that. Hit that perfectly and then had that rejection. It may still end up tanking. I don't even fucking know. I don't care at this point. It's a not a fun market to be a part of. This is just all slop. So hopefully next week is better. Like I'm happy we won. Happy we got the dub. But it's just these market conditions are they take a toll on you. They get you tired from just watching the screen, watching paint dry. Um, Sparky Dragon 432. I see you use ICT. Sorry, I just saw this by the way. I was very focused. Can you give some recommendation for where to start learning or specific series he has on YouTube that helped you the most? So I'll tell you what I did. I started with the 2022. I'll actually even pull it up on here. So hopefully you're still watching. Um, I'll pull it up on YouTube and kind of show you what I did. So I started with the 2022 mentorship. Whoops. So you're gonna want to watch all of those. And then, I mean, what I did and how I got better at really how I got my skill in reading price action is by sitting in through all of his lives. Like if you go back to his 2023, 2024 live streams, I pretty much sat through all of those, and they get long, right? Like 3 hours. This says I didn't sit through all of it, but I think YouTube just sometimes fucks up with it. But that's 4 hours, 4 hours to it. Like I sat through so much tape reading with him to the point where I feel like I get as close to reading price like in the way he views price as I almost can. And I have almost 6 years of experience now, so that also helps. But I would definitely recommend the 2022 mentorship. I would recommend um, the 2024 mentorship after that. So the 2024 mentorship is really like a advanced 2022 mentorship. This is a 2024 is not talked about enough. It's a really good mentorship. Um, and then you're gonna want to start to learn like some of the core content, like daily profiles, session profiles. I believe is that month 8? Yeah, intraday profiles. You're gonna really want to know about that. So it's kind of a lot already because what the couple things I told you is going to take you weeks to watch already. So I would focus on the 2022 mentorship first and just get your baseline there and then start back testing with that. Okay, so hopefully that helps. Um, yeah, overall good day today though. Made about a grand 400 on each funded account, and then I don't know what I made on here. I don't want to check my funds because I don't want people to see it or see my account numbers. So yeah, I'm gonna get off. If you tuned in, thank you for watching. Appreciate it. It was a slow stream, slow market. Just tough to sit through, but yeah, ended with a win. So